All right, my friends, welcome back to another Dividend Happy Hour. I think we need to pour one out for 3M real quick, guys. It had a pretty rough day, as did the rest of the market, which is going to be, as I'm sure many of you have guessed, that's going to be the main topic of today's video. We are going to be talking about 3M and the substantial drop this company has seen today. Down over 9.5% just for the day, which is, you know, that doesn't happen very often, guys. So we definitely have to talk about it. But before we get into that, guys, I want to know in the live chat real quick, a couple of things. I mean, number one, where's everyone hailing from tonight? I know we have some familiar faces in here. I see a lot of the usual suspects that show up to this this weekly event. So thank you guys so much for tuning in. So let me know where you guys are hailing from. And also if you guys answer this every week, don't feel like you have to keep doing it. But any new faces, let us know where you're from. And also number two, what did you guys bring tonight to Dividend Happy Hour? What are you currently sitting on? Let me know in the live chat. Personally, I'm sipping on a little margarita as per usual. Have it in my Flamingo cup from Las Vegas. So hey, here's to hopefully what was a good week for you guys, and here's to another Dividend Happy Hour. Like I said, let's pour one out for 3M. So anyway, like I was saying, guys, first we're going to talk about a little 3M. Then I want to get into a weekly little portfolio update, just show you guys how my portfolio performed today, which not good, and also for the week. I'm not going to be talking about it in the Sunday video like I normally do, so I figure we can spend a few minutes just going through that today. So anyway, I'm going to look in the live chat real quick, just give some quick shout outs, say what's up to you guys. We got Shamir from Samir all the way from Canada. We've got Phil from Montreal, also Canada. Bruce Wayne. Wow, man. Pleasure to have you aboard. All the way from Mississippi, we got my good friend Harris from Austin, Texas. Kevin. Sorry, Kevin. Kevin's from Yakima. We got Will from Kansas City. Mountain High from Manchester, New Hampshire. Rajan, all the way from Louisiana. Good to have you, my friend. Cookie Monster, Reading, Pennsylvania. Let's see. Who else we got? We got Paolo from Burbank. Okay, very nice, Paolo. Ibrahim from New York City. We've got Christian from Las Vegas. Nice, man. Very cool. Yeah, and let's see what you guys are sipping on too. I'm gonna go through some of these. I saw a few in there. I know we're at the top of the chat. I saw some IPAs, some beer shout outs. We got Mountain High. He's got a Misguided Angel IPA. Bruce Wayne sipping a 3D Energy. I haven't tried those. Yet. Those are supposed to be pretty good. Christian Guzman. Shout out Christian Guzman. Let's see who we got. Will sipping a Pepsi. Classic. Can't go wrong there. And Phil. Phil says he is sipping on a nice glass of wine after that 10% drop from 3M. That should do the trick. Yeah. Very nice. Okay. Well, guys, I guess without further ado, we should probably just get into the main topic. Oh, real quick, Jim Michelob Ultra. Too many comments to keep up with, guys. You guys are really engaged tonight. That's awesome. Keep it up. I'll go check on the comments here probably in a few minutes once I get through the main stuff. But I've noticed if I leave the comments in front of me, like as I'm going through my spiel, I get distracted. I get sidetracked. So let's see if we can minimize that, guys. Now, getting into 3M, which many of you are probably 3M shareholders. Some of you may not be. But for those of you who are, you know that 3M, switch the screen. 3M saw a very substantial drop today. As you can see right here, they were down 9.5% just for the day. And really, guys, 3M has had a rough go around all year, all 2022, and even leading into this year. As you can see, year to date, down 27.34%. In the last month, in the last 30 days, down 7.27%. But really, guys, they were up prior to today for the month. I mean, today's 9.5% drop really, really brought them down. And if we zoom out over a longer period of time, we can see that, well, actually starting with the 5 years, we can see that they're still down across the last 5-year period. So if you bought in 2018 or 2017 to today, you would have lost some money. But, you know, 10 years, the return's still not that great, 39% gain in the last 10 years. But really, guys, prior to, you know, I guess prior to like 2018, the beginning of 2018, 3M was in a really great spot, consistently going up, a couple dips here and there. Sorry, guys, I know that thing right there is really getting in the way. But consistent gains from 3M prior to 2018, and pretty much from 2018 till today, a lot of turbulence, a lot of compression in the share price, and it steadily made its way down, from its high back at the beginning of 2018. It was about $260 per share, and now it's about half that today. The last 4 years till today, it's dropped 50%, really. And what was the year to date? Down 27.3%. So yeah, I guess, guys, really 3M has had a rough go around. And specifically regarding today, this 9.5% drop, the way I see it, guys, there are two main catalysts here. The first of which, as many of you know as well, Jerome Powell gave his much highly anticipated speech in Jackson Hole today. Basically, what he said is that the Federal Reserve is going to be taking more aggressive measures to combat inflation. If we go check this out, I'll read a couple of lines here from this article I found. So, Federal Reserve Chairman Jerome Powell delivered a stern commitment Friday to halting inflation, warning that he expects the central bank to continue raising interest rates in a way that will cause some pain, quote unquote, some definite discomfort to the U.S. economy. Not much of a surprise, to be honest with you guys. We knew that, some probably drastic measures were going to need to be taken. We got to get inflation under control. Now, in his much anticipated annual policy speech at Jackson Hole, Powell affirmed that the Fed will use our tools forcefully to attack inflation that is still running near its highest level in more than 40 years. And he goes on to say, while higher interest rates, slower growth, and softer labor market conditions will bring down inflation, they will also bring some pain to households and businesses, he said in his remarks. These are the unfortunate costs of reducing inflation, but a failure to restore price stability would mean far greater pain. So really just Sorry, guys. I don't know what happened there. Trying to nip this in the bud before it really gets worse. And I mean, the market did not respond well to this at all, as I'm sure you can imagine. And going back to this, let me see if I can go back here. So going back to this, the market did not respond well at all. As you can see, all three major indices, the entire broad market was down. The Dow Jones was down 3%, S&P down about 3.4%, and the NASDAQ down nearly 4%. So this was one of the first catalysts that I think brought 3M down. It brought obviously a lot of stocks down. As you guys will see later in the video, every single stock in my portfolio today was in the red. I had what I think is probably the worst loss in unrealized gain I've ever seen in my portfolio. But more on that later, like I said. The second catalyst that was affecting 3M specifically today was there was an update on the litigation that has been going on surrounding their earplugs. And for those of you who don't know, just a very quick Spark Notes version of what's going on. 3M is currently going through some litigation with members of the U.S. military who basically have been using their earplugs, their whatever, whose design I think was given to 3M by the U.S. government. I could have that wrong, but they basically these veterans are saying that the 3M earplugs have caused them to go through some hearing loss, and it's not been good. It's been costing 3M a lot of time, a lot of money, and like I said, they've been going through some litigation. But the news today, let's go back over to the screen. The news today basically said that the company's Aero, which is a subsidiary, which is one of the companies that 3M owns, who manufactured these government-issued earplugs, they filed for bankruptcy last month. And before I go any further, guys, the file for bankruptcy was an attempt to basically mitigate any further litigation. Historically, typically how it has worked is companies can file for bankruptcy, and that kind of, in a sense, makes it go away, right? So that's what this Aero subsidiary did, which allowed them to pause the pending lawsuits. But today, a judge determined that 3M, the parent company, which itself did not file for bankruptcy, is not entitled to those protections per the report. So based on that, it sounds like the lawsuits are back on. And it's not good. Like I said, 3M, it's cost them a lot of money so far, and I'm reading my notes right here. So far, guys, 3M has lost 10 out of the 16 cases that have gone to trial so far, with about $265 million being awarded to, in total, 13 different plaintiffs. Excuse me. So they've shelled out a lot of money, and even with this bankruptcy through the subsidiary, I think they set aside like $1 billion to go to basically be awarded to other veterans that have come forward with this issue. And none of this is a statement whether this whole litigation piece is right or wrong. It just, from an investor standpoint, it's something we need to talk about because it affects us as shareholders. And What's going to happen from here? A 3M spokesperson did say that the company intends to appeal. So company intends to appeal. So it doesn't seem like it's over quite yet. So we'll see what happens. But as far as what I'm doing, guys, with 3M, if we go back over to the screen right here, I want to show you my position with this company real quick. So going over here, let's see. Is that big enough? No, it's not big enough. Let me do that. Can you guys see that okay? Let me know in the comments. Is that big enough? It should be. If not, I'll zoom in a little bit more. Why don't I just zoom in a little bit more? See, how's that look? Yeah, that looks pretty good. So as you guys can see, my 3M position right here, I currently have 11.91 shares. And by the way, guys, what we're looking at is my Google spreadsheet I put together. If you want to grab a link to it, there's a link in the description. Totally free. All you need to do is click the link. It'll take you to a templated version of this spreadsheet. And yeah, you can start inputting your own data and stuff like that. It's very nifty. So going back to 3M, I have just about 12 shares of this company, and my average cost per share is $165.43, which is quite a bit higher than the current share price, as you can see. It's about like $36 higher than where this company is currently priced. And right now, 3M after today is my second biggest loser, the second biggest loser in my portfolio. I'm officially down about 22%, only behind Intel, where I'm down about 30%. So 3M definitely taking an L today. But I guess the silver lining here, if there is one, at least in the interim, until we figure out what's going to happen and how all this litigation is going to play out, I guess the good thing is it is pushing that dividend yield up, which is good. Currently, after today's drop, it's 4.62%, which is extremely high. And I guess is fitting. If you're going to be buying into this company, you're adding more shares to this company, there's a little bit more risk with 3M right now. So it's nice to see a little bit higher yield. Now, does this higher yield, is it high enough to want to take on that risk? I don't know. I think that's something you'll have to just use your own discretion on. But moving on, my yield on cost with 3M, so basically how much income I'm getting per my average cost per share, it's very low, 3.6%. So the forward yield is a lot higher than the yield on cost, and that's what happens when you're down so much in a position like this as I am. No big deal though, guys. 3M's only about 4% of my portfolio, and basically my stance on it, what I plan to do, I haven't added to this position for a long, long time. I don't know how many months it's been since I've contributed to any 3M. But for now, guys, I'm holding strong. I don't have any intent to, not necessarily any intent to buy more. Definitely don't plan on selling at this point. I don't, in general, want to make any drastic moves with 3M right now, simply because this is really, truthfully, my first time going through anything like this with any of the companies in my portfolio. So I'm treading lightly until I develop a better understanding of really how this is going to play out, and until I get a better sense of what the outcome from something like this might be. And actually, that's where you guys can help. If you guys, I'd actually be curious to hear your guys' thoughts on this in the live chat or in the comments below, what you think will come of 3M from here and how you see all this litigation playing out. It's a pretty big deal. And this is not the only one they're going through. I didn't take any notes on it, but another thing they're going through is something that has to do with, I'm just kind of now really learning about it, something that has to do with like forever chemicals, basically things like Teflon, who 3M used in some of their products, I believe. I don't know if currently, but back in the day for sure. And when this stuff seeps into the water system, it's not good because it can't be broken down and dissolved into water. It basically, I guess, taints the water, which obviously is not a good thing. So they're going through that in a couple different places. I believe one of the states here in the U.S., I don't remember which one, Alabama maybe, they were going through it. And also I believe over in Belgium, they're going through like a $500 million. They basically awarded $500 million to somewhere in Belgium for this whole ordeal. So I need to read up more on that. But that's another headwind that's facing 3M right now. But I guess if there is, anything to say in defense of 3M, I mean, this is a pretty well-run company otherwise, guys. Going to the dividend stats, 63 years of consecutive dividend growth, okay? This company has definitely been through it all, and they have continued to grow and pay the dividend through probably a lot of other things that they have faced. So that's another reason I'm not too much in a rush to sell 3M, because at the end of the day, I think they probably will persevere. I don't know exactly what they'll look like coming out the other side, but at this point in time, I'm not entirely convinced that they'll cease to exist, I guess, for lack of a better term. So anyway, that's what's going on with 3M now. Switching gears, guys, getting into a quick weekly portfolio update. Like I said, I'm not going to be talking about it in my Sunday video where I normally would. Sunday's video is going to be like the best stocks to buy in September. And so, I wanted to show you guys what I bought this week and how my portfolio performed, which it's not good. So if we go back over to the screen real quick, we're going to switch gears, go back over to the spreadsheet, and we're actually going to go to the dashboard page, and I need to zoom out a little bit here. Let's go. Okay, so it's kind of cut off. So let's go maybe like 60%. Maybe you guys can see that. Yeah, that looks pretty good. Okay, so as you guys can see at this point in time, my portfolio is currently valued at $38,411.42, which compared to last week, guys, let's go over here. Compared to last week, my portfolio was sitting at, about $1,000 higher, actually, $39,417. And as far as dividend income goes, last week I was sitting at $1,755. Compared to today, guys, I'm sitting at, over there in the top right, you can see $1,760. So I gained about $5 just this week in annual dividend income. And before we move on and talk about which stocks I picked up this week, you guys will notice this dashboard page looks a little different than it normally does. Some of you guys know I was kind of talking about it in the Discord group. I am in the process of updating the spreadsheet. This is version 4. I'm currently working on version 5, and one of the things that will be coming out is an updated dashboard. Nothing too crazy, just making some small tweaks here and there. I think how it is right now is pretty much what it will be, except for maybe this cell right here. I don't know how useful this this information is, to be honest with you. So I'm kind of using it as a placeholder until I come up with a better idea of something to put here that would be like a relevant portfolio stat to include for you guys. So something I'm still chewing on, but yeah, that's what's going on here with I guess the spreadsheet. Just a little sneak peek for you guys. And there's going to be some new, you'll see a new chart here. There's a couple new pages. Some good stuff coming in version 5.0. Nothing too crazy, but that's what's going on. Anyway, getting into my purchases for the week, guys. Going back here, switching to the next slide. You guys can see I picked up 2 different stocks this week. I contributed $100, basically picked up 2 shares of KRC, Kilroy Realty Corporation, which is the newest position to my dividend stock portfolio. I just started buying this stock a couple of weeks ago. And then I contributed the rest of my weekly contribution to Starbucks, put about $50, just under $50 into Starbucks, and got about half a share of that bad boy. So that's what I picked up this week, guys. I kind of had thought about buying some more Intel because, you guys saw a moment ago, it's my worst performing position, so I can definitely average down on it right now. But I guess I opted to go with Starbucks instead, and the main reason I did, I think after today or after this week, I'm pretty much chilling on Starbucks for a little bit. I don't need any more. It's like 8.5% of my portfolio. But the reason I bought some more Starbucks today is because I was desperate to get it under like a $90 average cost per share. And I did that. So going back here, guys, I'll show you. I just barely did it. Let's zoom in a little bit more. Zoom in quite a bit, actually. So Starbucks right here, my average cost is now $89.95. So I'm content with that. All I really wanted to do was get it under $90 per share. I don't know, just kind of an arbitrary thing. And now that I've done that, I'm going to switch gears and move on. So who knows? Maybe I'll start contributing a little bit more to 3M. No. I already said I wasn't going to. I need to relax on that. Plus, I have a lot of exposure to the industrial sector. I'd be better off probably buying Snap-on or Lockheed Martin. So anyway, that's what's going on with me. And, I'm going to put it back on you guys now. Couple questions. What did you buy this week? Number 1, which stocks did you pick up? Let me know in the live chat. Let me know in the comments below. And also, let me know if you haven't done so already. I'm going to start going through some of these comments here. Let me know what you guys think about this whole 3M situation. What are you guys doing about it if you're a shareholder? How do you think this is going to play out? What's your plan of attack with this? Let me know in the live chat. I'm going to take a sip here of my marg. And let's get into a little Q&A, guys. Before we do, though, a couple things. If you haven't done so already, hit the thumbs up on this live stream. Excuse me. And if you enjoy this and want to see more content from me in the future, I'm putting out 2 videos every single week, always on the topic of dividend stocks. Hit the subscribe button as well. There's a lot of good stuff coming your way. So now let's pull up some comments and see what is going on here. So I'm starting at the very top, guys. So let's see here. And if you guys have any questions or anything for me, start putting them in the live chat and I'll get to them. I'm trying to I've been trying to be really good about like closing this up in about an hour because you guys know I always say this. I could seriously go on all night doing this. Let's see. Oh, Russ, what's going on, man? Hey, buddy, I'm on a job working late, popping in to say hi and looking to add some more 3M in the 120s. It's going to be choppy until their litigation situation plays out. Got to run. Russ, thanks for stopping by, man. Thanks for stopping by. Let's see, guys. Sorry, I'm really trying to find a good one to pull up here. I'm still at the very beginning. It's just a lot of like, what's up, Ryan? Location stuff. So, I see a lot of like people. It seems like you guys are pretty bullish on 3M over a long-term perspective. Kevin here, says there is too much uncertainty and risk for 3M at the moment for me to consider investing in them. And I think that's fair. As far as starting a new position, as far as starting a new position, I don't think there's any rush. Probably until this really gets sorted out and there's some sort of light at the end of the tunnel, the share price is probably going to be continuing to go down. And so having said that, why start a position right now when you can get it a little bit cheaper? And then again, like to Christian's point though, 3M has a huge moat. They aren't going anywhere. Short-term pains, long-term gains. And hopefully that's true. I'm keeping my fingers crossed that that's going to be the case. But I do think that there is some more compression coming our way for 3M share price. So for those maybe thinking about starting a new position, to Kevin's point, it probably would be best to hold off and just assess the situation, sit on the sidelines and see what's going to happen. Okay, let's keep going here. EBS wants to know, how's your day going, Ryan? My day is going pretty well. I've had a really great day. The only thing I did not get to do today that I really wanted to was get a back workout in, but it's okay. There's always tomorrow. Let's see. Jesse here says Ryan should do a shot. He sounds sad. No, sir. I did that last week, and that was enough for me. Let's see. Okay. How's your guys' week going? What's going on with you guys? Oh, good question from Kevin here. Now that you aren't dripping, it gives you more to invest as you want. I thought that was a question at first before I put it up, but it's a statement. Yeah, very true. I'm actually glad that, I turned drip off, maybe you guys might know, maybe it was a month and a half ago at this point, and I feel pretty good doing that. It's been nice to take those funds, especially in higher dividend paying months like this one, which I won't reveal how much, but new record income month this month, guys. I'm so stoked to show you guys the video, but really good month of income. But it's been really nice to be able to manually allocate that to other positions. Okay, Dividend Fire, great question. Hey, Ryan, Stanley Black & Decker is now down 51% year to date. Any thoughts on starting a position? Me personally, I don't have any intent to start a position in Stanley Black & Decker, but yeah, it is definitely heading south in share price, right? Stanley Black & Decker can't catch a break. And a little spoiler alert, this is one of the stocks that I'll be talking about in Sunday's video, talking about the best stocks to buy in September. And it's made its way into those videos like a handful of times this year just because it just keeps going down in share price. I will say this on Stanley Black & Decker. Excuse me. Even though it has come down so much, goodness gracious, I'm sorry, guys. Because it has come down so much year to date, or despite how much it has come down year to date, Stanley Black & Decker's PE ratio, just strictly talking PE ratio, is still not too far off from the sector median, number one, and it's also really not too far off from the company's historical 5-year average PE ratio. So even though even though Stanley Black & Decker's really dropped, it still has some room to come down. And there are still other stocks in the sector, like Snap-on, who's seen positive performance year to date, but still has a lower PE ratio, a lower valuation. And comparing the financials, personally, I have Snap-on in my portfolio. So comparing the financials, I personally prefer Snap-on, and the one thing I will say that Stanley Black & Decker has going for it is its years of dividend growth. I believe it has 53 consecutive years of dividend growth, which is pretty impressive. Dividend king. Gotta love those. But still, the valuation's a little bit high compared to what's going on in the rest of the sector. That's just my take. And, that plus just the other positions I have in that sector, those are the reasons I'm not considering starting a position. It's not a bad stock to start a position in. Definitely not a bad stock to start a position in, but that's why I'm kind of staying out of it. Hopefully that makes sense. Okay, so let me see. Let's see what you guys have picked up this week. So Suzuki Man says, I bought some WH for fun. Are you talking about Whirlpool? WHR? Bruce Wayne says, I bought in too early on the week, but I got one share of Medtronic, MED, and one T. Rowe Price. Nice. Good pickups, man. Christian says, I bought Apple, Costco, Microsoft, Procter & Gamble, Store, Realty Income, Stag, Altria Group, and JP Morgan. Wow. Nice week of buying for you, Christian. Good job, man. Did you guys see that that Altria Group dividend raise too? Like a 4% raise this quarter. That's pretty slick. Not mad about that. Josh says, I think I'm going to take this opportunity to pick up some Comcast, some Williams-Sonoma, and some Qualcomm. Yeah, good choices, man. Jim opened a position in Dow. Wow, good for you, Jim. Good stuff. What sector is that in? Is that in the materials sector? I don't quite know exactly what Dow does. I know I've heard of them. Let's see. Okay, Mountain High says this week's buys: LYB before the ex-dividend date, Skyworks Solutions, Snap-on, Bristol-Myers Squibb, Intel, Verizon, MPW, and Target. Man, a lot of good pickups in there. A lot of good stuff. Okay. I haven't looked at Target for a while, actually. I haven't seen what it's been doing this week. I want to go back over to the screen and check out its share price, because Target is definitely on my buy list. I'd love to pick up some Target. So 160, okay, it's come down a little bit this week, guys. Loss of 2.5%, 2.7%, down 4.4, goodness gracious, down 4% just today. What's I don't know if the yield will be updated, but that's not too bad, guys. I mean, it's tickling its 52-week low. It's getting there. The PE's just above 20. The financials for Target, too, are really nice. Like, they're seeing some good growth, especially the last couple of years. They've been a beneficiary of the pandemic. So that could be one of the reasons we're seeing increased sales for Target. But yeah, really love Target. Good stuff. Kevin said he spread $250 across 10 of the 11 lagging stocks, building in $25 increments and have on average $175 each. Good for you, Kevin. Keep it up, man. Harris spread $110 on 16 different stocks. Nice, man. Good for you. Oh, Snowden. I like how you worded this. So Altria Group, AT&T, and Verizon, the three amigos only. I'm planning to load on when we drop more. Yeah, I've been kind of nibbling here and there at Verizon as well over these last couple months. I've added probably a handful of shares to my position. AT&T, not so much. I should definitely consider it though, because I, like with Verizon, my AT&T position. Let's go back over here. My AT&T position and my Verizon position are like right in line with one another. So you guys can see right here, they're right next to each other. So AT&T, I'm down 17.18%. Verizon, I'm down 17.63%. Yeah, so they're like right in line with one another. And I think I have more invested. I mean, not even actually. So my cost basis and my market value are very similar with both of these stocks. A little bit more invested in AT&T, but not too much. Not too much more. Let's see. Going back over to here. Thoughts on UMH? Rashawn wants to know. Let's go check it out. I've actually never heard of this company. So going back over here to Seeking Alpha, UMH Properties. Is this a real estate investment trust? So guys, let's first take a look at the performance and the valuation. Then we'll head over to the dividend stats. And real quick too, before I forget. Oh yeah, we're looking at the screen. Let me take this off. Real quick too, before I forget, guys, in the description of this video, there's a link to try a free 7-day trial of Seeking Alpha Premium. Very cool. I highly recommend you check that out. And if you guys stick around after the free trial, they're offering basically the annual version, annual what do you call it? An annual subscription for only $99 compared to what it usually is. It's like $240. So definitely a good opportunity to try some Seeking Alpha Premium if you guys have ever wanted to check it out. But anyway, UMH, let's see. So in the last year, down 18%. Year to date, down 30%. Wow. And then in the last month, they're down 7%. So this company is definitely heading south in share price. This P to FFO is kind of high, though, 23.18%. And I already know this is going to be higher than the sector median. If we go over here, yeah. So like looking at this, the valuation is not great. Basically 52% higher than the sector median. So as far as value goes, it's not great. Let's look at the financials just briefly. Okay, this looks really good. So we're seeing very consistent growth on the top line revenues here. Every year for the last 10 years, they've been growing revenue. Fantastic. Let's see what the bottom line, the funds from operation, adjusted funds from operation is doing. So that's kind of a different story. It's definitely not trending as up as the top line, right? So 2018 to 2019 down, and then it kind of was trickling back up there. But they did grow during 2020 and 2021, so that's good. What's the FFO payout ratio? Where is that? So this is high. This is extremely high. So this is the amount of funds from operation, which is what they use to pay the dividend. That's how much they pay. That's the payout ratio, basically. So they're paying 100 in the last 12 months, 125% of that to the dividend. So more than they're taking in. That's kind of a red flag to me. Taking a look at the dividend stats, 4.25% for the yield, okay. 5-year growth rate, basically non-existent with only 1 year of dividend growth. I mean, truth be told, Rashawn, I think there's better options out there as far as real estate investment trusts go. I don't want to shove this one down your guys' throats, but like KRC, for example, which is the REIT that I just invested in, let's like compare the difference here. So KRC, we're going to see very similar growth on the top line, right? Just trending upward for the last 10 years. Now, where it differs is on the bottom line. The AFFO is doing the same exact thing, just going up and up and up, which is different than what we saw with UMH, right? And looking at this FFO payout ratio, it's in a much better spot than what we saw with that last company, 49%, 46%, 51, 51, 46. So the FFO payout ratio is much lower, much more sustainable. And the dividend stats are in a better spot too. The forward yield is comparable, 4.12%, with a 5-year growth rate that's like 3 times the size of UNMH's, 6.06%, and the dividend growth history is 6 consecutive years. So there's even more dividend growth there. So, just comparing and contrasting, I think there's better options out there than UMH. But, thanks for bringing that one up. I hadn't heard of that company before. Phil here says he bought some Walgreens Boots Alliance today. Man, good pickup. Sam, good question. Why not buy a dividend ETF versus buying individual value stocks? So I do have dividend ETFs. In my main portfolio, which is what we're looking at here, it's pretty much all comprised of individual companies, as you saw, with the exceptions of JEPI and XYLD, 2 covered call ETFs that I have. And I'll actually pull this up as I'm talking. I actually do have a different portfolio, my Roth IRA on M1 Finance, which I'm logging into right now. I'll pull it up in a second. But in this portfolio, it's solely comprised of ETFs. I have 5 different ETFs in this Roth IRA. And to me, Sam, like the balance is like, okay, where do we go here? To me, Sam, it's a pretty good balance. I'm more active in my main portfolio, the taxable brokerage account with all the individual dividend stocks. And then, my Roth IRA is much more passive, very hands-off. So as you can see, this is my Roth IRA, Ryan's Roth, just over $2,000 in here, which I started at the very beginning of this year. And I contribute $50 to this every week. I'd like to increase the amount that I'm contributing to, and I will over time. But in this portfolio, I have SCHD, I have VU, the Vanguard S&P 500 ETF, I have VWO, the Emerging Markets ETF, VYMI, which is the International High Dividend ETF, and then VBR, which is a small cap value ETF. So I feel like I'm pretty well balanced between the two. I've got one portfolio that's just individual stocks. That's kind of for me. Then I've got the Roth IRA with just the ETFs that I guess does add some more diversification for my stock portfolio, but also can kind of, help serve as a cushion, especially as that portfolio grows bigger in case things don't quite work out with some of these individual picks. So hopefully that answers your question. That's a really good question. Um, let's see. So trading with a dummy has an interesting point here. What's really odd is that during uncertainty, dividend stocks are usually safe, but recently they have been getting beat up like growth stocks out of the blue. I think that's true in some cases. But not across the board. I mean, if we go back over here, going to Seeking Alpha, I'll just show you some of the stocks in my portfolio. There's a small portion of stocks, maybe, I don't know how small, but there's a portion of stocks in my portfolio that are actually positive year to date. And if we go here, like Chevron, well, a fair amount of them are actually. We've got a good handful of stocks that are up year to date. And even in the last month, just in my portfolio, there's a fair amount of stocks that are up quite a bit. And there's less examples of stocks that are down. And it just depends. Like, it just depends on the stocks. And what we're seeing here, some of the stocks that are up are energy, industrials, defense stocks. We've got utilities. We've got, financials. We've got consumer discretionary. Lowe's is crushing it. Starbucks crushed it in the last month. 3M, even despite today, is doing okay in the last month. Maybe this just hasn't updated yet, though. Maybe this still needs to update. Snap-on's done really well, both year to date and in the last month. Altria Group is up. So, there's still examples of stocks that are doing well, across both time periods in the last month and and year to date. So it just depends. But to your point too, like, there are some that are just really taking a beating. Intel for sure. I think Verizon is another one that's really taken a beating this year. AT&T actually hasn't been too bad this year. Let's keep going. Let's see. Yeah, so Clifford here, going back to Stanley Black & Decker earlier, pay that king premium for SWK. Yeah, so maybe that's why they're still, like, even with the price coming down so much, maybe that's why they're still, like, kind of priced a little bit more expensively than some of the other stocks in the sector. Yeah, good point. But Stanley Black & Decker is a really good company still. So, and good enough, I guess, for Pedro, who started a position in SWK and WB. Goodness gracious. And WBD. Let's see here. Okay, so Shamir says the Altria Group hike was about half of what I thought it would be. Man, I'll take it. I'll take an Altria Group raise. But you're right. Based on their 5-year average, which I believe is about 8% dividend growth compounded, yeah, it was about half of that. So I get what you're saying there. Let's see. Let's see what else, guys. I'm actually doing a pretty decent job of keeping up with the comments. I'm only about 8 minutes behind. Let's see. Find another comment here for you guys. Take a sip of my margarita here. So, trading with the dummies taken off or has already taken off. Man, thanks for stopping by anyway. Appreciate you, man. Okay, Kevin here wants to know thoughts on WEC. I'm not familiar with this company, but let's take a look. Okay. And once again, guys, there's a link in the description of the video if you want to check out a free 7-day trial of Seeking Alpha. And along with that, there is a pretty sweet discount on the premium version for a whole year. It's $99 compared to what it usually is for a whole year of Seeking Alpha, $239. So definitely a huge discount. So WEC Energy Group, what have we got here? Let's take this off the screen. So, in the last year, doing pretty good, up 11%, year to date up 9%. This is just another example of a dividend stock that's up. It's not getting completely destroyed. And in the last month, they're even up another 5%. But take a look at this PE ratio, guys. 24.2, definitely up there, which I guess is okay if this company is seeing a lot of growth, which doesn't appear to be the case, right? 2016 to 2019 was flat, pretty flat in terms of revenue growth. They dropped in 2020, and then they're up more in 2021. And then maybe let's take a look at their cash flow just real quick too. So even the cash flow, like, they're doing negative cash flow ever since 2017. So that's not great. What's the net income situation looking like? Scrolling back up here. So the net income is actually looking pretty decent at least. So that's good. Yeah, I don't know. Let's just look at the dividend stats. Dude, I don't know. I don't know about this one. What does this company even do? natural gas and electricity, and renewable and non-regulated renewable energy. It's a utility company. Okay. So maybe that's why they're not seeing the growth. I don't know. Like, just in terms of valuation and dividend stats, there's probably better options out there that are at a better discount. And personally, I don't know too much about the utility sector, so I'm probably not the best person to ask about that. Yeah, so I don't know. But at a glance, it's a pass for me. Looks like you guys in the live chat are kind of sharing that same sentiment. Oh, Harris. Ryan, going to Vegas next week, how does one obtain a cool Flamingo Cup? So if you go to the Flamingo Go pool, which, Harris, actually, where are you staying? Let me know in the live chat where you're staying at. But if you go to the Flamingo and go to their pool, which is called the Go pool, and you basically buy like one of the larger, you just buy a drink from the bar, but buy like the larger size. They come in these novelty cups that you can take home. So we grabbed a couple of them. And yeah, that's how you get the cup. Let's see. Man, I'm jealous of you going to Vegas, man. So let's see. Okay, so Christian wants to know, what do you think... Sorry, I'm looking at another comment. What do you think of KR? I think they're a bit overvalued right now, but I would love to start a position someday. So KR, is that Kroger? I think that's Kroger. If it's Kroger, I like Kroger. That's a pretty solid company. I don't know too much about them, but even just the PE ratio is not too bad. I'm guessing it's going to be lower than the sector median. Oh yeah, by a lot. So in the consumer staples sector, Kroger is about 36.5% lower, but they're still a little bit higher. The PE ratio is a little bit higher than the 5-year average, right in line, which is not bad. Just based on valuation, it's not too terrible. Taking a quick look at the financials, we're still seeing some steady revenue growth on the top line, and even gross profit, we're seeing some steady growth for the most part. And then scrolling down, what are they doing? Are they buying back shares? Oh yeah, they're aggressively buying back shares. Wow, look at that. Wow. It's my Owen Wilson, guys. What else are we looking at on this page? So let's take a look at the balance sheet. What's going on there? So, excuse me. So a lot of cash right now, a lot of quiche, about 1.3, 1.4 billion in cash. And then net debt's about 20 billion. So let's see what their cash flow is doing. 20 billion in net debt compared to about 4 billion in free cash flow. So they could pay that off in 5 years. That's not too bad if they used all this free cash flow, which has been steady the last couple of years. Pretty decent, but before that, it was about 50% of where it was in 2021 and 2022. So if the cash flow, continues to stay in this range above 4 billion per year, that the debt situation's not too bad. But if it drops down, then that could be a different story. But yeah, overall, I like Kroger, and they're still a growing company, as we saw. And the dividend stats are really good, actually. 2% yield, okay, super low payout ratio. Really nice 5-year growth rate and pretty solid dividend growth history, 15 years of consecutive growth. Man, I actually really like these stats. It looks like there was a long period of time, though, unless Seeking Alpha is tripping, which could definitely be the case. It looks like there was a period of time where they weren't really paying the dividend, but maybe that's just Seeking Alpha, a glitch with Seeking Alpha. I don't know. But yeah, Kroger actually doesn't look too bad. I'm actually, I was kind of thinking about this recently. I would not mind at all adding another consumer staples stock to my portfolio. I've been kind of looking for one, just kind of on the low. I've been looking for one that's at a discount, but it's tough to find. Procter & Gamble, actually, let's go back over to the screen. I want to talk about Procter & Gamble a little bit. I noticed today that Procter & Gamble in my own portfolio is really not too far off from my average cost per share. I still have about a 6% gain with Procter & Gamble, but year to date down nearly 13%. The PE ratio is still kind of high, 25, which is definitely, or 24.5, excuse me, definitely a lot higher than what we're seeing with Kroger. But man, Procter & Gamble is just one of those companies, guys. Just such a beast. It's one of my favorite companies. Anyway, I don't know. I don't know what my point with that was. But yeah, definitely a lot of good consumer staple stocks out there. Out of the bunch, Kroger, it looks to be at a really, really solid value. Let's see. And actually, on that note, let's take a look at a couple other ones real quick. Let's look at like Colgate, Palmolive, CL. I also want to look at Hershey. I just want to compare some PE ratios, some prices. So Colgate's got a higher PE ratio, and let's actually do this, guys. This is going to be a lot easier. So we're going to use one of the premium tools from Seeking Alpha. We're going to compare some stocks here. So you guys, do me a favor, start listing off some consumer staples here in the live chat. Let's do a little comparison. So we're going to add Procter & Gamble. We're going to add Colgate Palmolive. Let's add, what's another one that's like, Kimberly-Clark, KMB. Let's add, what else do we got, guys? Give me some other staples here that are kind of along these lines, like the Procter & Gamble's, the Colgate's, the Kimberly-Clark's, basically these consumer products. Not as much like the Altria Groups, the Philip Morris's, stuff like that. That's still technically consumer staples. I kind of want to add Hershey's too. Let's add Hershey's. HSY. We've got CHD. Oh, yeah. Church & Dwight. Yeah, that's a pretty solid company too. I forget about them. General Mills. Let's add Kellogg's. Oh, maximum symbols reached. Let's remove Hershey's and add Kellogg's. And we'll leave... let's leave Pepsi and Coca-Cola out. I would love to add Pepsi too at some point. Okay, so let's check this out here. This is a really nifty tool. It's actually one of my favorite tools on the premium version. So let's scroll down. Let's kind of look at this by valuation. So the valuation for a lot of these is not great. According to this, General Mills and Kellogg's have the better valuation out of the bunch. Let's take a look at the returns. So 1 month return, Church & Dwight's come down, or Church & Dwight, excuse me. I don't know why I said Churchill. I'm thinking about Winston Churchill probably. Year to date, Church & Dwight's also down along with Procter & Gamble, but General Mills and Kellogg's have been crushing it. We're going to open up a new tab here with Church & Dwight and take a deeper look into that one. Okay, Procter & Gamble. Okay, Church & Dwight does have a lower yield. The payout ratios are very nice, though. Look at this, a lot lower than what we're seeing with a lot of these other staples. Decent dividend growth. Out of the bunch, Church & Dwight has the highest dividend growth as well. Yeah, the grades here on the dividends for all these companies are really looking great. Great. Like really good dividend safety, really good dividend growth across the board, really good consistency. I guess it's no surprise. It's just that kind of comes with the territory of these consumer staple stocks. Okay, PE ratios. Okay, Church & Dwight is definitely at the most premium valuation of the bunch. Kellogg's in General Mills, it's below that 20, guys, that 20 threshold that we kind of talk about sometimes. What else we got here? Growth. Let's take a look at the growth, top line and bottom line, if it'll show it here. So revenue growth just year over year. It's all pretty similar. Kimberly-Clark has a little bit of a leg up on the competition. Revenue growth compounded across the last 5 years. Church & Dwight is taking the cake. Definitely taking the cake with Procter & Gamble in second. Man, what else we got here? Net income. 3-year CAGR. That's not bad. Look at Procter & Gamble's net income CAGR across the last 3 years. That's great. That's great. General Mills and Kellogg's have a pretty awesome growth CAGR as well. Looking at the levered free cash flow 3-year CAGR. Okay, Procter & Gamble's is not great. Kimberly-Clark's is good. Okay. So I don't know. Some good stuff there. Let's take a deeper look into Church & Dwight. Goodness, excuse me. So we already know the valuation's pretty pricey, right? Let's go over to the financials. Gosh, guys, excuse me. I'm so sorry. Okay, look at this, guys. Seeing some really solid growth on the top line. Solid revenue growth, solid growth in gross profit. Operating income's going up and up and up and to the right. Net income's looking fantastic. I guess, so far this is kind of explaining the premium in the share price. They're buying back shares. That's fantastic. The payout ratio's really low. I mean, we kind of saw that a moment ago, but consistently low, consistently below like 40%, at least since 2015. And let's take a look at the balance sheet real quick. Okay, so about $639 million in cash and equivalents and about 2.3 billion in net debt. That's not bad. Let's see too. We already saw the shares outstanding. We saw that. Cash flow. So 2.3 billion in net debt. Sorry if I'm going a little bit fast, guys. I apologize. And 653 million in levered free cash flow in the last 12 months. And this is pretty consistent. So they could definitely pay down all of their debt in less than 5 years if like this range of free cash flow, if this stays consistent, which it seems like it is. And the free cash flow per share as well is going up and up and up, save for, this right here between 2020 and 2021. But this is really nice. And this is a combination, I think, of them just buying back shares and increasing their free cash flow just ever so slightly. So that's really good to see. I don't remember exactly what the dividend stats were. So I remember the low starting yield. Oh, yeah, that's right. Low payout ratio. We talked about that. 5-year growth rate's not bad. It's about 7%. Nice dividend growth history, 17 years. But let's see how long they've been paying. So 32 years. That's pretty good, guys. I'm liking Church & Dwight. I really don't know a lot about this company. I do think they own Arm & Hammer, though. That's one thing yeah, okay. So Arm & Hammer, Trojan Condoms, OxyClean, Spinbrush, First Response, Nair. Okay, so they have some pretty solid brands. They own some pretty solid brands. I like that. I'm liking Church & Dwight. That valuation's not great, obviously, but otherwise pretty solid. Let's see what else we got here. I might have missed some comments. Oh, you guys gave me some. Sorry, guys. You guys gave me a lot more suggestions to look at. Clorox. I see Clorox there. Clorox is another one. I've looked into that in the past. Great company, obviously. Last time I looked at them, though, they were extremely pricey. And then Trail Vega here says Utz. I always forget about Utz. I know PPC Ian is a big fan of Utz. And I've had some of their food. I actually really like Utz brand. But I remember them being really expensive as well. So 34.5. What's the financials? I don't remember the financials being too great. I mean, there's not a lot of history here, but there's some growth, I guess. I don't want to look too deep into Utz. But you guys might know this, who's the company that owns, who's the company that owns Dots, the Dots pretzels? You guys know what I'm talking about? Let's actually Google that real quick. So go back over here, whatever that company is, I might want to buy into it. It's one of the staples. Have you guys had these Dots pretzels? Oh my freaking goodness, guys. These are so addicting. They're like my favorite snack right now. But who owns Dots Pretzels? Oh, Hershey. That's who it is. Hershey owns Dots Pretzels. Okay. Man. Okay. I might have to put Hershey's on my watch list because seriously, guys, I'm hooked on these freaking pretzels. They are so good. You can buy them at like Target. You can buy them at Walmart, I think. They're becoming increasingly easy to find, but oh my freaking gosh, they are addicting. So be careful. Probably don't buy them because you're going to get hooked on them. Let's see here. Let's see. Hey, Kimpoy, what's up, man? I just saw your comment here. Hopefully you're still on the stream. Glad to have you aboard, my friend. Good to see you. Okay, you guys got me in the live chat. Hershey's with Dots. Yeah, okay. You guys are quick. Yeah, some Mountain High. He knows what I'm talking about. Dots are amazing. Oh, gosh, yeah. Every time I come into my kitchen, and if I'm just like passing through, filling up my water, whatever I'm doing, if I'm just passing through, I'll just pop open the pantry and grab a handful of Dots. Two things, guys. Two things. I'm powerless before two things. Like Dots pretzels, I can't resist them. Even more so, Oreos. I am weak for Oreos. Like, I cannot say no. I can't say no to Oreos. Like, if there's an Oreo and like a thing of double stuffed Oreos, I can't do it. And so for my birthday last month, my girlfriend's mom bought me like a thing of Oreos, the double stuff. And same thing, guys. Every time I'd go into the kitchen or I'd just be passing through, anytime I'd walk by the pantry, have to get like 2 Oreos, just 2, couple for the road. And it's just, it's dangerous, really. So I'm seeing Clifford here says, please check VFC. It was you or maybe Russ that gave me pause about VFC. I've talked about VF Corporation a handful of times on the channel. I was actually going to include it in Sunday's video because it has dropped quite a bit in the last month, and especially in the last year. So for those of you who don't know too, VF Corporation owns brands like Vans, the North Face, Dickies, JanSport, Timberland. They own some pretty reputable apparel companies or apparel brands, and as you guys can see from this chart right here, the share prices really come down. Year to date, they're down 44%. In the last month, they're down double digits as well, down 11%. And look over here on the right-hand side of the screen, guys. We are right at a 52-week low. They probably touched that 52-week low today with VFC. And even with that, though, the PE ratio is still a little bit on the higher end, 14.43. And is this company a discretionary or a staples? Okay, so it's a discretionary company. I will tell you this, though. Who asked me about VFC? Clifford, right? Clifford, I'll tell you this about VFC. I was actually kind of looking into it yesterday. I don't really like the financials that much. The revenue is pretty stagnant. Right? There's not much growth on the top line, and scrolling down to the bottom line, I mean, they are buying back some shares. Well, let's actually look at the net income. The net income's all over the place here. And if we go over to the free cash flow, kind of the same thing. There's just, it's very up and down. There's not much consistency there. And even on the free cash flow per share, definitely not consistent, right? And so there's some red flags here with VFC, but at the same time, they are a dividend king, I believe, or they're close to it. I think they are a dividend king. Seeking Alpha has them at 48 years of growth, and that might be accurate, but I thought I remember reading somewhere that this company was a dividend king. I will say that they do have this going for them. That's working in their favor, and so is the forward dividend yield, 4.5%. Not too bad. So I don't know. I guess there's some good and some bad about VFC. Personally, I'm staying away from it. I'm a big Vans company. Oh, yeah, Supreme. They own Supreme, too. Thank you, Leroy. I'm a big fan of Vans. I pretty much exclusively wear Vans, except for I have a couple pairs of Converse, but I can't tell you guys how many pairs of Vans I have. So many. So I'd love to like this company. I would love to love this company more than I do, but it's just, it's not in it. I'm not in it, I mean. Okay, let's keep going in the comments. And you know what, too, Clifford, like on that note with VFC, that's just my take. Like, don't stay away from it just because that's what I say. Like, that's just my opinion on the company. And similarly, like saying that, just thinking about the brands they own, I mean, they're pretty stable brand. Like Vans is definitely a staple at this point. JanSport, kids, high school kids, not 90% of them. A lot of them, like all you see is JanSport backpacks. Timberlands, I don't know exactly how popular Timberlands are anymore. Like there's definitely a niche for them. Supreme had its run. Supreme's not as cool as it used to be. Supreme's also had its start in skateboarding, in the skateboarding industry as well. A lot of people don't know that. And, I guess all of this is to say fashion is obviously cyclical and trends change. So that's one of the reasons one of the things that is keeping me out of VFC. So EBS here says, look into LRCX. You know what, man? I actually saw you guys talking about it in the Discord yesterday, and I really liked what I saw with this company. So LRCX, I believe, LRCX, I believe makes some of the processing materials that companies like Intel or a lot of the semiconductor companies use to manufacture their products. So Lam Research Corporation, LRCX, designs, manufactures, refurbishes whatever semiconductor processing equipment used in the fabrication of integrated circuits. Yeah. So they basically help companies like Intel or Qualcomm or Texas Instruments or NVIDIA, AMD, all those kind of companies make their products. They help make the equipment that makes those products, I believe, or something like that. And look at this, guys. Like the revenue is fantastic. This is a very aggressively growing company. Gross profit is growing along with that. Net income is looking great. Okay. Like basically 2019, 2020, 2021, and 22 were all pretty good, definitely trending upwards. And they're buying back shares a lot. They're buying back a lot of shares. That's really great. Looking at the balance sheet, I don't know that I even got this far when I was looking at them recently, but 135. Well, let's look at this. Cash and short-term investments, that's pretty liquid. So 3.6 billion compared to, and their net debt is 1.5 billion. Now let's look at their free cash flow. So 1.5 billion in net debt and 1.6 billion just in the last year for levered free cash flow. So the debt's not an issue, right? The dividend stats are looking really good too, from what I remember. Low yield, low starting yield, but that's okay. Super low payout ratio. They're not contributing a lot of their earnings to the dividend, so that's great. Extremely high 5-year growth rate, about 30% with 7 years of consecutive dividend growth. Let's take a look at the dividend history chart right here too, guys. Look at this. Very aggressive dividend growth. Crazy. Looks like between 2018 and between right here, they more than doubled the dividend. So that's pretty fantastic. And I guess if you wanted, obviously there's a lot going on in the semiconductor industry right now. And if you wanted some exposure to that, but maybe didn't want to directly buy those sort of companies, that's where like a Lamb Research company would come in handy. And, you know, EBS North, man, I think that was a really good find. And there was another one that you talked about too. I think it was Applied Materials or something along those lines that was, you know, kind of a similar business, but man, looks really solid. And I'm actually going to consider adding this stock to my watch list. In fact, let's just do it right now. I'm going to add it to the watch list. We're going to add it to the due diligence list. Okay. Keep an eye on that bad boy. Yeah, thank you for the suggestion, man. That's a really good find. Okay, guys, so it's 6:01. Let's go through. Let's maybe do one more comment. One more here. Oh, I see some everything money talk, I think. Anyway, it doesn't matter. Oh, okay, here it is. So for some reason, you guys are talking about Paul. Paul is hysterical. He said F you to me before. Chris said that. Oh, dang. Dividend fire, dude. EM got mad at me when I told them Apple drops to 80. The entire economy is collapsing. Man, I wish Apple would drop to 80. That'd be legit. But yeah, North, once again, man, I see you said you're welcome there. Thank you so much for sharing that stock. Really good find. I think you said in the Discord too, I was just kind of scrolling through that conversation. I think you said you were going through, what were you going through? Like some sort of brokerage report that was sent to you? Yeah, seems like a really interesting company. I definitely would have to look deeper into it. Excuse me. Anyway, I don't see any more comments coming in, so I think this is a pretty good place to wrap things up. And so with that, you got, oh, real quick, last thing. Cass, I'm proud of you. You bought some Kilroy shares. Thank you for the content about the company. Cool. I'm glad you started a position. I think, yeah, we'll see what happens with it. Like I'm down about 5% with the stock right now. It's all good though. But I think it's a really good company. Definitely, I'm really liking the financials. So let's see what happens. Let's see what happens. But anyway, guys, let's wrap it up. Let's call it a night. You guys, you got big plans. It's Big Friday night. I'll let you go. Get out of your hair. But with that, thank you guys so much for tuning in and hanging out with me this last hour for another very fun, very successful Dividend Happy Hour. I hope you guys all have a fantastic weekend. Stay out of trouble, please, guys. Some of you guys, I can't keep bailing you out of jail. Okay, I don't have that kind of money. I keep blowing it on your bail. But you guys stay out of trouble. Keep up the great work. And be sure to tune into Sunday's video because we're talking about a handful of really great stocks that are at a discount. So tune into Sunday's video. Once again, thank you guys so much for watching. Hope you have a great weekend. And I will, as always, I'll see you in the next one.